We had a pretty flat day today in the S&P 500, but despite being a red day and a flat choppy day, it did bounce off of our 5-day moving average. Okay, remember in the strong bull trend, SPY has a habit of bouncing off the 5-day moving averages consistently. Alright, more often than not, it does. And every now and then it'll drop below. We'll get a bounce off our lower moving averages, which would be here the 13 and the 20, okay? So last time we had a bounce there was just a few days ago. We had a nice bounce off the 20, nice bullish bounce. We had some bounces off the 5 here. And then today here as well, okay? So you look at the behavior, past behaviors of the S&P 500. In a strong bull trend, it bounces off the 5-day moving averages a lot, okay? And right now we had one of those days where it was a nice bullish bounce. And I still have a price target for SPY around 444 to the 446 range, okay? This blue line is the resistant level. Okay? All the way since April. This resistant level has been here. Had a few tests, and right now is looking like it wants to go test it again, okay? And remember what I always say, when you see these support or resistant levels, you always want to watch out for potential areas of liquidity. Alright, the areas of liquidity is where the potential stop losses will be clustering up, okay? So with SPY going up this high and very close to resistant, there's going to be a lot of people, especially retail traders, that will be looking to short this market, okay? Just like they have been in the past. All right, every time it got to this level, SPY would do a nice pullback, okay? So a lot of retail traders are noticing this trend that's happening. So when SPY gets to that level again, what do you think they're going to do? They are going to look to short, which means in this blue area, potentially there are a lot of stop losses. And I believe the market makers will look to take out those stop losses to trick us out. And that not only would that take out all the shorters that are with the stop losses up here, it'll bring in the breakout traders. Okay? We'll bring in the breakout traders that believe SPY will continue to go up. And if they want to, they can push SPY back into range and possibly taking out some of the breakout traders, okay? So these are very risky levels. If you're trying to go long, these are risky levels, but it's also risky to go to the downside as well. That's why I always say we don't buy at the tip, we buy at the dip. All right, I like to look for bounces off of these low dips, off the 13-day, off the 20-day. Those are strong support levels, okay? And also bounces off the 5-day. Today we got a nice bounce. I like to enter. When I enter off these nice bounces off the 5, I like to see the SPY go just under, to cross just under. I always set an alarm right there. I'll look to buy, but it has to go just under. I want to see the market makers take out the liquid areas of liquidity before I enter. But today, it didn't quite do that. It just bounced right off the 5-day. It was a little too perfect today. Okay, I like to enter like this when it just goes under the 5-day and then it goes right back up. Those are nice. Okay. So overall, I'm bullish on the SPY. If you take a look at the VIX inverses the SPY, meaning it goes in the opposite direction. And it also represents the fear in the market by the whales, the big institutions and stuff like that. Not retail traders. And right now, the fear is low. Okay? So big money is not afraid. Okay? VIX is traded under all our moving average. I also want you to notice that this is a red candle. VIX had a red day today. SPY had a red day today. So keep an eye on that. That is a bullish divergence. Okay, usually when SPY has a red day, you want to see VIX have a green candle, or VIX have a red candle, you want to see SPY with a green candle. Today they both had red candles, so that's a bullish divergence. Keep in mind that SPY did close a little lower than the previous day, and despite being a red candle, VIX did close higher than its previous day as well, okay? So not really a divergence, but somewhat of a divergence. I felt like it was definitely worth mentioning and paying attention to, okay? But overall, the VIX looks very bearish and the SPY looks very bullish, okay? I still got the price target at 444 to 446 level. I think we will hit it very, very soon. And then maybe we'll possibly get a pullback, but I don't believe in calling a top in a bull market, okay? It can go higher than my price target for sure. Okay, it's definitely done it in the past. All right, so bottom line, I am bullish on the SPY. Let's stay objective. Okay, we have support here at 441. That's a critical support level, or that's the breakout support level from previous breakout right here. We also have support here at 439.50, and a strong support here at the 20-day moving average around 437. Okay, 437. All right, and if that does not hold, we can sell all the way down to 428, 429 level with the 50-day moving averages. Also, this blue line is a support level for us. Okay, it's been a support level since May. All right, but overall, the chart looks very bullish. I'm not seeing anything bearish, so I think we should remain bullish and continue looking for buying opportunities if it presents itself. All right. So moving on to the triple Q. Triple Q, very similar to the SPY. It closed above our 5-day moving average. So all the moving averages are stacked on top of each other. Triple Q continue to close above it. You know, I have a price target of 371. And if it breaks 371, the next price target will be 376 for triple Q. Okay, but we'll see what happens. There was a pretty flat day today. But like I said, this was a bullish close. It was nice. It went just under the 5-day moving average and went right back up and closed. That's very bullish to me. Okay? So, bottom line, I'm bullish on the triple Q. Moving on to ARKK. Now, ARKK, I'm still bullish on ARKK, but we had a sideways day on ARKK. Now, I want you to notice that this is a double inside day candle. This is an inside day candle because it's on a daily chart. And it's within the range of the previous candle. This makes it the mother candle. This is the child candle. However, we had another inside candle, so it makes it a double inside candle. So this would be the grandmother, the mother candle, and this would be the child candle. Now, the way you would trade inside day setup like this is if you watch for the break of the range of the mother candle, or in this case, the grandmother's candle. So we want to see what the fourth candle will do. Okay, if it breaks the grandmother's range, so go above 126.25, that's very bullish, and we could possibly head to my next price target around 131. And if it breaks the grandmother's low, then it'll possibly head down lower. Okay, but that's how you trade inside day candles. But like I said, I'm bullish on on ARKK. I believe this is the 5th wave up, so we have the trend that began here. Okay, we get the Elliott wave. This would be wave 1, 2. This would be 3, and this would be 4 right here, and then 5. I have a 142 price target up here. We have a gap up there around 142. Okay, you can see the gap right here, right there. Okay, now I know there's gonna be some people that's saying, well, the price of wave 4 should not overlap into wave 1. Yes, that's true. I explained it in a previous video, and I addressed it. Okay, remember that Elliott wave is one of the most popular technical analysis used by people like us, retail traders, and the market makers they know this for sure. They know this, and they know the rules, maybe even better than the retail traders who use this. Okay, so when they look at that, they say, oh, well, retail traders are going to think that ARKK should not go into this price range because the rules said it shouldn't. So that's going to mess with the sentiment of the retail traders, right? Because they think, oh, because of the rules, it shouldn't be. This is not valid. So now they think that it's going to go lower. Because it's not wave 4. Wave 4 should turn into wave 5. So now they think wave 5 isn't coming because one rule got violated or something. Well, guess what? The market makers know about these rules, and they want to manipulate us using the same rules that is taught to us. Okay? This is why 95% of traders lose, because either we're trading with our emotions or we're trying to trade based on conventional knowledge. And the market makers use those same conventional knowledge against us. Okay? So you think of the area of liquidity. Where would the area of liquidity have been? It would have been right there in that range. It would have been there. Why? Because the rule says wave 4 should not head into that level. So what do you think the market maker is going to do? They're going to break that rule and trick us retail traders. And then they will push it back up. Okay, that's why I still believe that we are in the 5th wave. And this is a double inside day candle right here, meaning it's consolidating for a bigger move up. Okay, that's what I believe. You got the moving averages stacked above each other. This is a bull trend. So I'm going to be, my bias will be to the upside. Okay, that's multiple reasons why I believe ARKK should go to the upside. All right, so that's my opinion. I'm not a financial advisor, but I'm going to stick with what I believe. I'm confident in this. Okay, 142 price target. But first, shorter term price target is 131. All right, that's ARKK. Moving on to Bitcoin. And Bitcoin for the first time in since May, it's trading above the 200-day moving average. So Bitcoin is building a lot of bullish momentum. We want to see 45K hold, okay, because that's where the 200-day moving average is. So that's a critical support level. If you watch my weekend analysis, I'll show you again. If you look at the weekly chart, you will see that Bitcoin is above all moving averages once again for the first time in a long time. Okay, so this is a bullish chart, guys. So we had the high here, the higher low, and next is coming the higher high. All right, so bullish on Bitcoin, bullish on pretty much all of the indices: SPY, QQQ, and ARKK. All right, so let's stay objective, guys, and I'll see you soon.